Who doesn't love saving money? Well, it's April, so that means we are on the final stretch to get your taxes done. So I wanted to share that owning a home actually comes with quite a few financial and tax benefits for homeowners. There's potentially thousands of dollars in tax deductions on the table. Today we are about to dive into that. I'm Karen Wright, your local Wichita, Kansas Realtor, and today we are talking about how to save some money via tax breaks just from owning a home. Make sure to hit that like and subscribe button so you can stay up to date on other videos to make your life a bit easier when it comes to real estate. If you are a homeowner, then you should take some time to explore your tax deductions. If you need help tackling the details of your situation, I'd always recommend to speak to a tax professional to ensure that you are cashing in on all of the tax deductions available to you. But now I'm going to talk to you about the most common ones. Number one, mortgage interest. If you have a mortgage on your home, you can take advantage of the mortgage interest deduction. You can lower your taxable income through this itemized deduction of the mortgage interest. In the past, homeowners could deduct up to $1 million in mortgage interest. However, the Tax Cuts and Jobs Act has reduced this limit to $750,000 as a single filer or married couple filing jointly. If you are married but filing separately, the deduction limit is $375,000 for each party. So home equity. Number two, home equity loan interest. A home equity loan is essentially a second mortgage on your home. With the home equity loan, you can access the equity you've built in your home as collateral to borrow funds that you need for other purposes. Like regular mortgage interest, you can deduct the interest you've paid on home equity loans and home equity lines of credit. However, you can only claim this deduction if you use the borrowed funds to pay for a home improvement. Prior to the Tax Cuts and Jobs Act of 2017, you could deduct the interest on these loans regardless of how you spent the funds. And then number three, discount points. When you take out a mortgage, you may have the option to purchase discount points to lower your interest rate on the loan. That's happening a lot these days. You have this option. One discount point will equate 1% of the mortgage amount. If these points are purchased to reduce the mortgage interest rate, you could deduct the cost of the discount points. However, the loan origination points will not be tax deductible. These are the fees that don't affect your interest rate of your loan. So number four, property taxes. As a homeowner, you'll face property taxes at a state and local level. You can deduct up to $10,000 of property taxes as a married couple filing jointly, or $5,000 if you are a single or married filing separately. So depending on your location, property tax deduction can be very valuable. Number five is necessary home improvements. So necessary home improvements can qualify as tax deductions. Of course, the definition of necessary is somewhat limited. If you upgrade your fully functioning kitchen, those improvement costs may not qualify. However, if you have to make permanent improvements to make your home more accessible sorry for the dog barking, for medical reasons, that should qualify. A few examples might include installing medical equipment, railings, or widening the doorways for an accessible home. Let's go to number six, home office expenses. So I do this one, being a real estate agent. If you operate a business in your residence, you may be able to deduct some of the expenses of maintaining that space. So the IRS requires that you use your home office for regular and exclusive business use in order to qualify for a deduction. If you only use the office space when it's convenient or just for working from home for your employer, that doesn't qualify. In terms of the deductions, the size of the deduction is based on the percentage of your home dedicated to your place of business. Number seven, mortgage insurance. So private mortgage insurance, or also known as PMI, is another expense that many homeowners must factor into their budget. So PMI is there to protect the lender if you are unable to continue making your payments on your mortgage. You can deduct your mortgage insurance payments on your itemized tax return. Okay, number eight, capital gains. Capital gains tax breaks come into play when you sell your home for a profit. So the capital gain is the difference between the value of the home when you bought it and when you sold it. For example, let's say you bought your home for $100,000. A few years later, you sell it for $150,000. With that deal, you walk away with a capital gain of $50,000. If you use your home as your primary residence for at least two of the last 5 years, you could keep some of the profits without any tax obligation. So as a married couple filing jointly, you can keep up to $500,000 in capital gains. As a single filer or a married couple filing separately, each party can keep up to $250,000 of capital gains without a tax obligation. So I've had this a few times. Well, over $500,000. So the key is basically that you lived in the house at least 2 of the last 5 years. So with a big tax break on the table, it's important to take the rules that apply to this deduction seriously. It's important to always approach tax season as a homeowner with a careful eye on maximizing the value of your home. It's a good idea to add up all your tax breaks, compare the sum of your itemized deductions to the standard deduction before deciding which option is best for your tax return. I hope you guys have found this video helpful. As always, if you have any questions, please do not hesitate to reach out to me. All of my information, contact information is in the description box below and in every video. I'd be happy to chat with you about any of your real estate questions. So until the next video, have a great day. And I'm always on your time frame, but should you have any questions in the meantime, I'm always available to answer. So thanks for watching. Have a great one.